Mortgage rates are finally starting to drop, giving people who are waiting to jump into that housing market more purchasing power.
As Ivan Rodriguez tells us, lower rates could also lead to more competition for homes on the market, driving up prices even more.
The Federal Reserve began raising interest rates to fight runaway inflation more than 2 years ago, making buying a home even more unaffordable, with prices soaring in recent years due to high demand and low inventory. But there may be a light at the end of the tunnel. The average 30-year fixed-rate mortgage fell to 6.46% last week. That's the lowest it's been in more than a year, far less than last year's peak of 7.79%, according to Freddie Mac.
A sharp drop in mortgage rates it could really boost affordability for the would-be homebuyer. But if it leads to a surge in demand, that could push prices up, and it doesn't take much of an increase in prices to then offset that benefit that you had gotten from the lower mortgage rates in the first place.
Supply is another key factor. With rates coming down, more homeowners may finally be willing to sell, breaking that lock-in effect associated with ultra-low pandemic-era mortgage rates.
Existing homeowners, they're not anxious to trade a 3% mortgage for a 7% mortgage. Well, mortgage rates have come down. We're not going back to 3% mortgages. So what's the tripwire where an existing homeowner says, well, okay, all right, they're low enough. We'll put this house on the market and look at the next one.
Experts advise first-time home buyers to have their financials in order before diving into the market, rather than making a decision based on small movements in the average mortgage rate.
There's much more to it than just the money that you need for a down payment. You're going to have closing costs that runs into the thousands of dollars. You're going to have moving expenses.
I'm Ivan Rodriguez reporting.